But let's talk about the markets now and how to approach it. Rahul Chadha, the Chief Investment Officer at Mirae Asset Global Investments, is joining us. Rahul, hi, good morning, and thanks for being with us on the channel. Has the time come to take some money off the table, or do you think that we're just getting started as far as the up move is concerned?
Okay, so we've always liked the India story, more so post this COVID recovery which has happened, and it's done well for us in our portfolios. Our regional funds are still kind of an overweight India. But in recent, I would say, days, we're taking some money off the table through, particularly in the Indian mid caps. Look, these names have run slightly ahead of fundamentals. Numbers are good. Overall, medium-term story is good. But yeah, I mean, the price momentum has been slightly on the excessive side. So one would be tempted to take some money off the table here.
Which buckets of the mid-cap space makes you a bit uncomfortable, Rahul?
Absolutely. So if we see, let's say, over the next 6-9 months, what is going to happen is Fed is again going to go back to contracting the balance sheet, which is unlike what happened from Feb onwards, where Fed expanded the balance sheet by close to $500 to $600 billion. We'll see a couple of more rate hikes coming. And I think that is going to put some pressure on rupee. What we're going to also see is domestic liquidity get tight over the next couple of quarters. Already the differential between dollar loans and local domestic rupee loans is a record low, and we see more corporates kind of repaying their overseas loans. So what we are expecting is in the next couple of quarters, as domestic liquidity gets tight, things would slow down. And obviously in line with what's happening globally with the Fed's balance sheet, multiple should contract.
Hi, Rahul. Rahul, we are bracing ourselves for earnings season, and IT stocks will kick-start that. How are you approaching the IT themes? I recall a few months ago you were in the camp that said that maybe for a longer duration you could buy some of these stocks and expect maybe high single-digit returns out there. Given that global setup is a little bit gloomy, how do you approach them from here on?
So this quarter obviously is going to be a soft quarter for IT names, but if the view is that a recession in US is a shallow recession, probably over the next 6 months, it would be a good time to accumulate these names. Look, we are also looking at China, and from what it looks like over there with the amount of balance sheet expansion PBOC is doing, it's highly likely that renminbi weakens. And historically, we've seen rupee and renminbi have very strong linkages. And what we discussed before in terms of interest rate differential between, US and India, highly likely that the Indian rupee also weakens. So from that perspective, IT may be a good hedge. And if one is willing to take a 12-18 months view, the view is that things improve in the US and growth momentum comes back for the sector.
Okay. I do want your thoughts, Rahul, on all that's been happening in the two-wheeler space, especially this, war in the premium segment, right? With the Bajaj launch, and then you have the Hero Harley launch as well. Tell me a little bit about whether the market is big enough, the premium end of the market is big enough for both to thrive, or do you think it would be one against the other? And as an investor, how do you approach it now?
Okay. So I think initially the margins get impacted for the incumbent iShares, as they're forced to, or they would be forced to add more features at the same price or give more discounts, or they'll see some of their market share go away if they don't do anything. So clearly it's going to be a pressure for incumbent, and which is iShares, and we've seen the stock come under pressure. But eventually over a medium term, which is 3 to 5 years, if we believe in the India story, if we believe in that premium segment growing, I think there is going to be a room for more than one strong player in that segment.
You're cautious on the mid-cap space, where you believe we will see profit booking as liquidity starts, tightening a little more. What about the large cap space? Anything in the large cap universe where you think the valuations have stretched?
In the large cap space, see, if you say what we like in the large cap space, we would like the large private sector banks. To be fair, they've not participated in the rally. Even the SOE banks like SBI, etc., they haven't really participated much in the rally. So I think that is an interesting space. These are names with good CASA franchises. Where one would take some money off the table is NBFCs. We've seen these NBFCs run very hard on this notion of peaking inflation, on the strong disbursement some of them declared. I think one would be tempted to take some money off the table there. Real estate is a space we've liked for last 3-4 years. I mean, these stocks have been multi-baggers for us. But again, with this thesis of tightening liquidity, slowing growth, I think temporarily one can take some money off the table in that space also.
Rahul, the one call I recall that, you were in minority, which you got right, as you were saying, allocate a small amount of money to these new age themes. And they played out because the past quarter actually was the best for them. From bombed out levels, they came back. A couple of stocks I think you liked were Nykaa as well as Zomato. What's your view on them now? The bounce came about, big returns came about from those lows that we saw a few months ago. But further upside for these stocks, or would you say it's a small bet I've taken, just hold on to it. Hopefully it pays better dividends.
I think for the market cap, these names have, these market caps are very small for the opportunity handled. And like the way you said, these are still 1.5-2% weights in our portfolios. Happy to kind of underwrite these names. Obviously, the gains are going to be much more slower than what we saw in last 3 to 6 months. And I think the ride is going to be a lot more tougher, particularly for Nykaa and fashion, where they have a lot more competitive segment. But at the end of the day, these are good companies. They've shown time and again their resilience, and that's what one is backing in them.
Okay. So overall, you seem to be a bit cautious on the markets now, especially because of the expectation perhaps that there could be another rate hike coming from the US Fed. But so far, if you look at it, these rate hikes have not impacted at least our markets, right? I mean, even if you look at the NASDAQ, it's up 30% this year, hikes or no hikes in interest rates. Do you think that could be the order of the next 6 months, that even if the interest rates continue to move higher, the interest in equity markets will remain solid world over?
So if you look at this rally, see, this rally started from Feb onwards, when we had this regional bank crisis in the US, and Fed came in quickly and people realized that, look, there's a policymaker put or there's a Fed put and policymakers will come quickly. And also there were signs of inflation falling faster than expected. And that's where everybody thought, look, you will have easing by the end of the year, growth momentum comes back, and this is the time to add. And now, speaking of inflation was correct, what we are not sure is whether central banks would ease so quickly. I think if you look at the statements which are coming from most central banks all over the world, what they're worried about is inflation being sticky. I think the narrative over the next 6-9 months is these policymakers are doing nothing despite slowing growth. And that is what is going to make markets worried. Markets are going to be worried about slowing revenue growth momentum with not much support coming from policymakers in terms of cutting rates. And that's where things would correct. Valuations are also not cheap. And I think we get better entry points over next 6 to 9 months for structural growth story. We clearly believe that, look, markets like US, India, where we've not seen any excesses investments over last 10 years, are very strong structural stories, and one wouldn't like to buy dips. And within let's say these multi-year structural stories, you'll get these cyclical humps, which we are probably going through now. And those would be good time to kind of take some money off the table and enter 10-15% lower.
Top down over the next 6 to 9 months, Rahul, what's the kind of index correction or time correction price-wise that you're anticipating for those who look at the index very closely?
You would not see much correction in index, to be fair. You will see a 5-7%, not much. I think a bigger pain is going to be felt in mid caps, and I think that's the way it's played out in last 4 to 5 months, where, to be fair, index hasn't really moved much, but some of these mid caps are up 30-40. For the domestic cyclicals, mid caps up nearly 50%.
Rahul, Bajaj Finance yesterday, the stock was under pressure. It's been a very, very good growth company, high pedigree, but the problem is valuations. And now you'll have a Reliance arm, that's Reliance Jio Financial Services, that will be listed as well. So maybe, in fact, there's more amount of stocks to play it if you want to play this theme. And that's why the stock was under pressure yesterday. Do you think the multiples are at risk, and how do you approach Bajaj Finance from here?
Absolutely. So I think what is happening to Bajaj Finance is very similar to what happened in Eicher Motor. Everybody sees the market cap. Everybody sees the profit pools. This is what is happening in the paint space also. And each of the promoters wants to have a slice of that market cap. And look, 3 years back, it was only Bajaj Finance which is growing. Now you've got all the private banks, ICICI, HDFC, Axis, everybody's growing. So obviously, somewhere the multiples need to adjust for that. I'd have nearly 2,70,000 crore book size. A wholesale funded NBFCs when liquidity is going to be tight. Somewhere market is not fully fathoming or discounting the risk.
Okay, all right. Thanks so much, Rahul, for stopping by and filling us in with your take on a whole host of stocks as well as sectors. Wishing you a good day ahead. We look forward to having a chat with you in the coming days as well.